Exercise 24-3 is very similar to exercise 24-1, where you have to compute what part of a year the payoff occurred, except now we have to handle depreciation. If you remember from when we talked about this in the financial portion of the course, we said that depreciation is not a cash expense. That's why we added it back for cash flows. It's not a cash expense. So, let's add it back now so we don't forget. And we'll add the 30 because the book tells us that they use straight line depreciation with a zero residual value over 5 years. So if the asset cost $150,000, and we depreciate it over 5 years of useful life, the annual depreciation is $30,000 per year. We add that to the net income generated by the machine or the investment because it was deducted to determine the income from that investment, but really shouldn't have been. So instead of $10,000 in year one, we really have $40,000 in year one. And instead of $25,000 in year two, we really have $55,000 in year two. $80,000 in year three, because again, we had 50 plus the 30 depreciation. Year four, $67,500. And year five, we had the 100 plus the 30, or 130,000. Now we're going to go through and do the basic subtraction just like we did in problem 1 or exercise 1. We paid $40,000 on the 150 at the end of the first year. We owe $110,000. During the second year, we paid back $50,000 of the 110 at the end of that year. We owe $55,000, excuse me. In year 3, we switched to the black. We owed 85, we earned 80. I'm sorry, I can't read. We earned 80, we owed 55. So that's $25,000 to the good. Sometime during that year, we switched over. And we're going to do the same thing. How much did we pay in that year? We made, of the 80,000, 55,000 of it was used to reach the break-even point. And then we'll just add the 67, that gives 92,500 and 222,500, just adding those. Now this is not a make or not make, buy or not buy decision. This is simply saying, what is the break-even point? Well, we know that the break-even point occurred in year 3. So in year 1 we paid back money, in year 2 we paid back money, year 3 we paid back $55,000 and we kept 25. So 55 of 80 was paid off in year 3. So in year 3 we paid off $55,000. We earned a total of $80,000. So that gives us the decimal 0.688. So 68% of the year, 69% of the year, 0.688% of the year was used to pay back the machine. So we paid back the machine all of year 1, all of year 2, and 68.8% of year 2. Our payback period for this is 2.688 years.